But first, with the latest from the markets and a busy reporting season, it's over to Jane Edwards.
Thanks, Alan. The week ended on Wall Street with some rarely seen vigour in the share market, as the indices each jumped by nearly 2% and the Dow registered its biggest one-day rise in 4 weeks, giving us a strong lead for our local market tomorrow. Investors were reassured by comments from Fed Chief Ben Bernanke at a meeting of central bank governors in Wyoming that the Fed is ready to use unconventional measures to boost growth if the outlook deteriorates. His words came on the heels of revised GDP figures showing growth of 1.4% in the June quarter. That's down from the 2.4% originally estimated, but not as bad as many analysts expected, and it was therefore interpreted as good news. World markets were shocked earlier in the week by figures showing a plunge in US housing sales and a contraction in business spending, leading to a sell-off of shares. It meant that the US posted its 3rd consecutive week in the red. The UK was flat, Europe dropped by 1%, Japan fell by 2% amid continuing deflation, and Australia gave away 1%. With more, here's Tom Elliott.
Well, as you just heard, it was a pretty bad week for shares on the Australian stock market. On the international front, many analysts are still quite worried about the prospect of a double-dip recession in the United States. Locally, of course, we still have a hung parliament. This is particularly problematic for shares like Telstra, which doesn't know if it'll have to compete with a $43 billion publicly funded national broadband network, and of course the big resources stocks like Rio, BHP and Fortescue, who don't know if they're going to be paying the special mineral resources rent tax or no resources tax whatsoever. We also, of course, had the tail end of the Australian results season. And turning first to BHP, the biggest resource company, it announced a record profit of $14.4 billion. However, CEO Marius Kloppers was cautious about the short-term outlook. Therefore, the stock was slightly weaker over the week. Woolworths surprised people a bit with a very good profit report, but also a very positive outlook statement. Its shares were up, and the shares of its major competitor Wesfarmers actually down over the week. And of course, Fairfax, probably the biggest surprise of the week. Very strong performance from its shares after it surprised on the upside with its profit and said things were looking good for the year ahead. Of course, there were some not so good profit results. Firstly, AGL. Now, he tried to paper over what was a pretty average profit for the past year by saying that the very cold winter we've been having in the southern states will push up electricity demand. Nice to see a big company not blaming global warming for a change. And of course, Foster's, well, they took another big hit on the wine division, and their cash cow beer division appears to be losing market share even more. However, Foster shares were reasonably firm because of the prospect of takeover action from either SAB Miller or Asahi or someone else, depending on to whom you listen. Winner of the week is Prime Infrastructure, up 23% after receiving a takeover bid from Canada's Brookfield Infrastructure Partners. Loser of the week, and there were plenty of them, was Ten Network Holdings, down 14% after unveiling plans to release a 3rd digital channel.